Hello, America. Welcome to my podcast. It's Ralph, the car guy, your guy in the car business. You got answers. You got questions. I got answers. It's been a little bit since I've been talking to my viewers, going through the COVID crunch and reformatting dealerships to be able to assist customers and provide a safe, sanitary environment. However, there are some topics to go over. I know I announced earlier in the week, I believe on Sunday, that we were going to have a live guest on the show, and he was going to tell his story about what's happened to him. And unfortunately, he is not going to be able to make it back to town, so he will be scheduled to be on the podcast next Tuesday at 7 o'clock. But there are some topics I wanted to go over and make sure the viewers are aware of what's going on in the marketplace, and as well as of course, answer any questions that you might have. Obviously, you can put them in the comment section, and if time permits, we'll answer them on the air. Otherwise, we will answer them on our next show. So to get right into it, here we are, and we're fighting our way back from the COVID-19 scare, or what was going on with the COVID-19 in the marketplace, and car dealerships were labeled as essential businesses, so we were open the whole time. But as we get closer to multiple states reopening, or I know Georgia, here we are in Atlanta, Georgia, where most of our businesses are open. There's some interesting things that are happening in the auto industry that I think everybody needs to be aware of, which is, the first thing is the valuations of vehicles. So at this point in the market, if you were in the market to buy a car or maybe even sell a car, you might want to look at possibly putting that together sooner than later, because here's what happened. So during the COVID-19, most of the factories closed down on all of the new car sides. So new car inventory across all brands are at historic lows. So the auto industry, like any other commodity, operates on what's called a supply and demand. I'm sure you've heard that before. And so right now, the supply of new car inventory is very, very small. So it makes the used cars a little bit more valuable. So if you have a car in the driveway that you were thinking about, trying to get that vehicle sold, or if you're looking to trade and maybe get into something new, you're going to get the most value for your bang right now, because obviously every dealer is trying to buy vehicles, and the factories are just starting to ship them. So the only thing they have to be able to sell is pre-owned cars, and everybody's fighting for the next car, which increases the value of your vehicle. So that is that's something you might want to look into if you're in the market to either buy a car or even sell a car. You had one and you're thinking about possibly getting rid of it, reducing the fleet. This would be a great time to do it. I was on WAOK with my friend Daryl Killigan. We were on the Auto Insider, and there was a topic I wanted to bring up today and make sure that we get a great knowledge out there. I briefly touched on it earlier in the year on the podcast, and that was the relationship of credit. The relationship of credit and purchasing cars, because even though we're in this COVID-19 and most businesses are closed, we're putting up record numbers in the auto industry. There's more people buying cars now than there was in January, to be honest with you. There was a lot of pent-up demand. A lot of people stayed home for a lot of people stayed home during the quarantine stage. So now everybody's out. There's been pent-up demand. So the business is in the auto industry is moving real well. So let's talk about credit, because it seems that even as I was with my friend on the Auto Insider on WAOK, there's a lot of consumers don't understand credit, and a lot of people that are not consumers looking to buy a car don't understand credit neither, because credit is something that's not really ever taught. Like you can go through, get your master's degree, and there's not going to be one class in any of your schooling that's going to teach you about credit and teach you the real ins and outs of what goes on with your credit, and how to manage it, and how to be able to fertilize it to be able to obtain loans if you should need one, right? And it doesn't matter if you're looking to buy a car or a house or a credit card or whatever. Anything that you need to use your credit for, you got to first understand how does credit work? What generates the score? We get consumers all the time that they bring in Credit Karma, Okay, great source. Great source. What I would use Credit Karma for, I would use it to monitor my credit to make sure nobody's putting inquiries on there, because every time you get an inquiry, it's going to pop up on your little app and let you know you got an inquiry, and to make sure that everything's good with your credit, because anything that goes bad, if you had God forbid you had a late payment, it's also going to let you know that you had one new late payment post, so that you can handle it from there. That's what I would use Credit Karma for, because Credit Karma is a free tool. And even though it gives you a score, it gives you a score that has no risk profile assigned to it. And what I mean by that is that if you pulled your credit for a mortgage, a credit card, and a car loan all on the same day, you're going to get 3 different scores. Well, 3 drastically, and then if you look at Credit Karma, the score is going to be drastically different as well. So the first thing is that we need to educate our consumers. And that's what I'm here for, is to educate on how do you take care of your credit in a fashion where you're going to be able to obtain the loans, and what is the marketing for 0%, or what's the marketing plans? What does your credit have to be to obtain these levels of financing that the manufacturers are offering? Because there's no secret that everybody doesn't qualify for 0%, right? So, but everybody could. Like, everybody could qualify for 0% if they took the steps necessary to be able to fertilize their credit bureau and treat their social security number like a secret passcode, right? And it's your secret passcode to money if you need it, right? But only if you need it, kind of deal. So there has to be some self-discipline in there, but with a little bit of self-discipline and a little bit of following exactly how the credit bureau works, right, you can get yourself in a position to lower the current interest rate that's on your car now, or put yourself in a position where you can lower the interest rate on other items that you financed through your financial picture, whether it's a mortgage, credit cards, or whatever. So going back to monitoring the credit. So every bank uses, every lending transaction, whether it's a mortgage, car loan, credit card, they use a risk profile assigned to the loan. So I'll give you an example. If you buy a house on 123 Main Street, guess what? The house is always going to be on 123 Main Street. So the bank doesn't have a risk of the house disappearing, all right? Well, if you buy a car and the car is parked in the driveway of 123 Main Street, well, the bank has a risk that that car might not be there. It might be somewhere else, right? If they happen to have to come look for it. So that's a different risk. Just right in that example, there's a different risk, right? The car could be moved not only from 123 Main Street, Atlanta, Georgia, it could be moved to 567 Blueprint Street, Brooklyn, New York, right? And the bank has no idea. So of course there's going to be a different risk level for loaning that money for an item that could be moved to any place in this country without the bank knowing where it's going, right? So that's one example. So when you look at Credit Karma, it doesn't have any of those overlays. It doesn't have an overlay for these risks for each specific kind of loan. The only overlay that Credit Karma has is it has an overlay for the credit card industry. That's why when you log into the Credit Karma, all you see is ads for credit cards, right? Because that's what their profile is based on. And if I had to guess, that's who their biggest contributor is of income, is from the credit card companies, right? Because Credit Karma is trying to sell you a credit card, right? Now, as it relates to obtaining a credit card, okay, I have them. Most Americans do have them. But we also have to understand how to use them and how does it affect your score. Now, some people use the credit cards, including myself, to gain points, okay? To gain points that you can use on airplane tickets or cash back or whatever it is. And they put all of their utilities and everything they do on the credit card. Well, that's really good, but you got to make sure that you never go over 20% of your available balance. So if your balance is only $1,000, then you can't ever let the credit card company report to the bureau that your balance is over $200. Because if they do, if they report to the bureau that your balance is $700 and you have a $1,000 limit, that could cost you I've seen in my years in the car business, I've seen over 100 points. That could cost you 100 points of your beacon score or your FICO score. 100 points swing. So this is where Credit Karma comes into perfect play, because you can see when they report. Every bank reports to the credit bureau at a different time in the month. However, they all mostly report every month. Some smaller credit cards, they report every 2 months. They report, they don't report as often. So you got to be careful with those. So the Credit Karma is good for that aspect, because you don't have to pay for it. And you can monitor. You say, okay, I know that they report on this day, so I got to make sure I pay my balance well before that and make sure I'm under that 20% if I'm trying to obtain a loan, because it's going to cost me 100 points, okay? And the score that you see on Credit Karma's app is not going to reflect that. However, when you come to get a loan for a vehicle and you have not only one card like that, but maybe you have 2 or 3 cards like that, you can see how exponentially that can affect your score. Now, as I said on the Auto Insider, on that episode, what most people should use, and it's not a free service, okay? It's something you pay for, but credit is pretty important, so I would think that you might want to invest a little bit of money because it's not too expensive, is myfico.com. Now, myfico.com, I'm not married to them. They don't sponsor my show at this present time. I'm just giving you the information that I personally use and I've seen others use throughout the industry that actually gives you real information for you to be able to make a totally informed decision on what you're going to do next. Whether you're going to come to the car dealership and obtain a loan, because you might not need the car this time, you might want it, or if you do need a car, well, maybe you had my FICO 6 months ago and you worked your way up to being able to put yourself in a position that if there is ever a rainy day, that you're in a position to be able to get the best rate out there for any vehicle, right? That's being able offered for sale, since 80% of all vehicles are financed. Okay, so that's a real number. 80% of all vehicles are financed across the country. So myfico.com allows you to overlay these different filters, let's call it, on top of the information that the credit bureau houses about you on how you pay your bills, right? And it gives you the score that the auto lenders are using. So that's kind of the answers to the test, right? So if you look on Credit Karma and it says you're a 750, and then you go to myfico.com, you say, okay, I want to see what my auto FICO is, and it's a 615. That's a drastic difference, right? And you would have came into the dealership and you said that you were 750, right? And then here's what happens. And it doesn't have to be any dealerships I run. It can be any dealership across the nation. I'm sure that if we have people in the car industry watching on my podcast, they can comment and tell you it happens all the time. That now the consumer comes in, they see the Credit Karma score, and then they come into the dealership and we pull the credit and it's drastically different. And now we're the bad people and we're just trying to help. And everybody gets irate. Everybody starts getting really flustered at the table, and really, we didn't do anything but tell you the truth, right? So it goes into the education, right? The education of making sure that your credit card balances aren't over 20% of what your actual limit is. And if it is, just be okay with the fact that that's going to drastically negatively affect your score. Matter of fact, credit cards are probably the worst possible thing you can do to even try to improve your score, unless you only plan on keeping $10 on them at all times. Because other than that, the credit card does not report. You can have a credit card for 10 years and it doesn't report a trend on how you paid them for 10 years. The credit card reporting is, what's the balance? Is it paid? That's it. An installment loan is the best possible way to build the credit, to make a deep file, to keep your score immune to little blips that might happen. The more installment activity that you have, the more your credit score can handle a little bump in the road, like a medical collection that might hit, or like something to that effect. You know, as long as you have long trends of payment history, and you know, that's what it shows. It shows January, February, March, April, May, and it shows every payment for each one of those months. And that's what the Bureau likes to generate the score. The Bureau doesn't like to generate. It doesn't like the credit cards because it doesn't give enough data. And the overlays or the filters, that's what they're looking for. They're looking for trends of payment, right? They're looking to see how you paid your car over a trend, not if you paid it one month and you didn't pay it the next month. They want to see how did you pay it for 3 years, you know, and that's really what the focus is in fertilizing your credit, is to make sure that you have the right mix of accounts, because you're gonna need credit someday, and if you need it, you got to understand how to use it, and that's the biggest thing that I've seen running car dealerships, and understanding the fact that, you know, obviously I went to school as well, and they've never actually taught me about credit, and I've talked to many different folks that have been to a lot of different you know, fancy schools, and nobody really talks about or explains the credit bureau and how the credit bureau works, and how to make sure that you're putting yourself in the right position to get the best possible loan. And then when you get to the dealership and you find somebody that's trustworthy and you have that good vibe feeling, and you ask a couple of teaser questions, because you're gonna have to, at some point, as a consumer, you give the car dealership your social, your date of birth, your address, all this personal information, but then you really don't trust the people that you're talking to, right? And it's because you watch some movies or listen to some rhetoric that the people in the car industry are terrible people, and they're going to take advantage of you. I mean, listen, man, I know an attorney that charge you $500 an hour, and she'll charge you for every piece of toilet paper that she uses. So, I mean, I don't know the difference between those two industries, but if you're going to give all your personal information to somebody sitting in front of you, there's going to have to be a little bit of trust there that this person might be able to help you get yourself back on the right road, because they're actually in a business where you're looking to buy something from. Like, you might buy a car every 5 years, and maybe in your lifetime you might buy 7. They sell a car every 7 minutes. So, like, that's kind of who I would want to trust if I had to ask a question. It's kind of like, if you want to be rich, do you go talk to the guy living under the bridge? Probably not, because he probably doesn't have the answer, right? You probably want to find somebody who's done it, right, to be able to help you. Now, I'm not saying everybody's perfect in the car industry. You're going to have to, the best way is to do some research, find out some little trinkets about the cars that most people won't pay attention to, and ask the questions. If they give you the answer that's truthful, because you already know the answer because you did a little tiny bit of research, then you can trust that person. Or if they give you an answer that, like, I don't know, but let's find out together, well, okay, let's find out together. Okay, that's a cool answer. But if they give you an answer that's off kilter, leave, because obviously you can't trust that person. That was a bad seed. But to be able to go into a car dealership and trust what they're telling you, when you're looking to buy a car and obtain a loan, I mean, you put a lot of trust in the pharmacist that gives you the little pill that you put in your mouth, right? I mean, you put more trust in the pharmacist that gives you the pill that gave you the right one, and you don't have any earthly idea what's in that pill. You just pop it in your mouth, and you trust the fact that you're going to wake up tomorrow. So I'm just saying you have to put a little more trust into the people that you're trying to do financial business with. So you come in looking for the car, you use myfico.com, you fertilize the credit, you know exactly where your score is, and now you're going to go out shopping either online or in person. Either way, you're going to have to obtain a loan. Either way, you're going to have to obtain a loan. So you're going to put in a credit app and be able to obtain a loan and negotiate a car deal. And know that the credit score is going to have to be above a 650, 670 to start obtaining the best possible rates. Okay? So if you're not there, then and you need a car drastically, well, then you're going to have to try to find the best possible scenario and find somebody you really trust. And if you can't find somebody you really trust, put your name in the comments. I'll be more than happy to put you in the right direction of somebody that you can trust. But once you find that person, and they tell you, you might be coming in looking for the loaded out GMC Harley Davidson pickup truck, right? and you haven't fertilized the credit enough to obtain that car. Because the banks look at the first most important thing that we talked about in the beginning of the show is your credit score. The credit score is very important. That's what they look at, number one. Then they look at, have you ever had a car with a payment in this amount? And if the answer is no, it might be a little more difficult, or the rate, because the risk might be a little bit higher for the banks, or the rate might be a little bit higher. Or if you've never had a car before and you've never borrowed money before, and it's the first time in the swimming pool, the chances of getting an $80,000 loan is pretty slim, unless the rate is going to be ridiculous, or you're going to put an absorbent amount of money down. So those are the things to understand. Is that in order to fertilize your credit, the first most important thing is education. Be educated about exactly what your credit score is, and if you don't understand it, ask questions to people like me. That's why I do these. I don't do these to I'm not selling any cars while I'm sitting here in the room in the studio doing a podcast. I'm trying to take my knowledge and share it with you and help you to be able to make the right choice when you're going down the road to purchase a vehicle, right? Because it's the second largest purchase of your lifetime, and most people finance them, right? So if you're going to do that, you got to understand how to get to the best possible rate. And sometimes you got to start with a different vehicle, pay it for like 13 months, because again, it's going to be an installment loan. That installment loan is going to fertilize your credit and boost your score, and then you move up to the next vehicle, right? And you keep it for like 12 months to 13 months and trade out of it. And yes, people are going to say, well, I'm going to have negative equity now. Well, listen, you're going to have negative equity either way. But in my experience, the negative equity swing is going to be less than the double-digit interest rate that you would pay on the other $30,000 of the car value. So that's what you got to look at. It's like you're looking at the wrong thing. If you're looking at, oh my God, if I do that, I'm going to have negative equity. Yeah, you will. You're going to have a little bit of negative equity if you didn't put a drastic amount of money down. The car is a depreciating asset. But if that's a $20,000 car and the interest rate is 17%, because that's what people start out at, and then you go and okay, so that's one thing, or you buy the car that's $40,000 at 17%, I can promise you that the amount that you're going to pay in interest over that time period is going to be drastically greater than the little bit of negative equity that you're going to have. You're going to save yourself to the tune of $28,000 in that span of time. So even with your little bit of negative equity and average depreciation on vehicles, so you get into the vehicle, you drive it for 13 months, you have that installment loan now, and that is your first car loan, and then you can move up in model. You can move up to the model that you wanted, not that you needed. You needed the car to take you to work. You wanted the car that had the panoramic sunroof. I get it, but you might have to move from that and drastically walk up, or crawl before we walk, right? And it's not the dealership's fault if they're not able to get you done on the car that's higher. I'm just telling you that from experience that this is the way of the world, and if you don't understand exactly how all of this works, then it's really going to cost you a lot of money in the long run. So the first thing is that make sure we understand that you got to fertilize your credit. You got to make sure that you understand the complete picture of your credit. And if there are any viewers that don't, please hit me in the DM. It's personal. You can hit me in the DM. We can talk back and forth. I can answer any questions you might have as it relates to the automotive industry, banking and finance in the automotive industry. Obviously, I can answer banking and finance in the mortgage industry. You're going to have to find Ralph, the mortgage guy, for that, and that's not me. I'm Ralph, the car guy. So you have to anything that relates to banking and finance in the auto industry. I can assure you, I can tell you the best way to be able to fertilize your credit to make sure you can obtain the best loan. Okay, and the best thing to do is to make sure that you're on a service that gives you an accurate picture of what the score is. And make sure you also have your friends at Credit Karma. Make sure you have them too, because you want to make sure that everything you're doing is being posted correctly, and it gives you the little app that gives you that. And that's where I would start. I would start with the Credit Karma. I wouldn't pay too much attention to the actual credit score, because that credit score really doesn't have any meaning whatsoever unless you're trying to obtain a Discover card. Look at my accounts, see how I'm paying those accounts, and then look at the Mike FICO, and then look at the actual score for the auto loan, so that you can see exactly where you are in the auto loan spectrum, so that you know that, okay, I can obtain the best loan either from the dealer or from my local credit union. I can go out and shop. I can go out and shop and get the best rate possible for my, the best, borrow the money at the best rate, and now you're in the driver's seat. And you either come to the dealership with a check from your bank, or you get one of the, great interest that the dealer can offer you. And now, a lot of times, like most of the times, I've been doing this 26 years, so 3 different markets, 3 different states, and I've seen that most of the time the dealer can get you a better rate than most credit unions out there, because of the amount of business we actually give the bank, right? So our portfolio, they lend money on the portfolio, they look at our portfolio, and a lot of times we can have a better rate because of the drastic amount of customers that we put with each such lender. And that brings us into captive lender financing. So the best position to be in is to be able to make a relationship with a captive lender, or maybe 1 or 2 captive lenders, meaning the lender that has the brand name of the car that you're buying. That's a captive lender. That lender only does business at Chevrolet, that under that logo. That lender only does business at Mercedes-Benz, that under that logo. So that's the position where you want to build a relationship with, for 1 and 2 reasons. First reason is you get the best rate. The factory sponsors those rates, and by the factory sponsors, it means they subvent them, or they help on some of the losses. So the bank risk profile is a little bit less than your average bank out there. So that's the captive side. But here's the jewel about the captive. So you've already fertilized your credit, and you're out buying a car, and you want to know who to finance with, and you can save 0.25% if you go outside the captive lender. Well, 0.25% on the loan, maybe 0.15% you can save, right? So that money I would actually pay and give to the captive lender as insurance for this one reason. We know that bad things happen to good people. And in the event that you're in the bucket of your life, right, when the roller coaster goes up and the roller coaster comes back down again, right, we always know that at some portions we're in the valley, and at other times we're on top of the mountain, right? So, and we go, and we usually hit those places multiple times in our life. We go up to the mountain, stay there for however long, go back down to the valley, go back up to the mountain again. So if you haven't hit that valley again, and you had a relationship with a captive lender, they're more apt to look past the little blips that you might have had when something tragic happened in your life, right? When a tragedy happens, usually the first thing that gets affected is your credit. 150% of the time, everybody I've spoke to over the years, the reason why my credit got to be like this is because of X. I got divorced, or X, somebody passed away, or something happens in your life, and it's going to happen. So if you had a relationship with a captive lender, they look past that more times than not, if you've always paid them. So as long as you've always paid the captive lender on time, they're the ones that are going to look past your little blips. Okay, so that was a little bit of a tidbit. I can go on for days on this subject. I'm going to do another episode on fertilizing the credit and being able to understand, and I'm going to have some guests on the show to be able to give it to you from their perspective. Tune in next week. I'm going to have a live guest on the show that came to me from the show to help with a situation that happened to him, which is you definitely don't want to miss this situation. And again, any comments or questions, leave it in the comments section. We'll be here every Tuesday from 7 to 7:30. You can catch the non-live clips on Ralph the Car Guy on YouTube, Instagram, Facebook. Thank you, Ralph the Car Guy, your guy in the car business.